Here's a question that I get asked often, and it's how do they determine what mortgage rates will be? On this episode, I share with you the factors. Welcome everyone to this episode of the Ask Jason Gelios show. I'm Jason Gelios, Michigan Realtor. Really appreciate you guys tuning in to this episode. Got a great question here, and it's how are mortgage rates determined, right? Is it just a dart on a board and they release the rate, or are there actual calculations and factors that go into determining a mortgage rate? And so I'm going to share with you two sets of factors. One is the factors that you can control, whether you're a homeowner or home buyer. And then the other factors are just things that are out of our hands and you can't really control, but they contribute to what a mortgage rate should be. So we're gonna go ahead and dive into this episode, but I gotta ask you one thing though. If you're not following me on social media, go ahead and follow me. Actually, you can even do that after the video, but you can follow me on these social media platforms. If you're watching this on YouTube, go ahead and hit subscribe and hit that bell so you are notified when I upload new videos. I upload this show once a week for those of you who don't know. So I really appreciate you tuning into this. I'm going to share with you the factors that help determine what mortgage rates will be. A few things here regarding the factors you can control is credit score. You can control what your credit score is. You can research and learn what helps a credit score go up, pay off some things to help it go up, get some more available credit that will help it go up. Just don't overdo it. But that's one of the things that you can absolutely control and get a better mortgage rate. Because if you have horrible credit, you're not going to get the best rate possible. Next one is loan to value ratio, or LTV. Lenders use this model to determine risk. So, for example, if you're purchasing a home and you're putting 20% down, then you would have 80% loan to value, or you're borrowing 80%. And you're putting 20% down, right? 80 and 20, 100%. Same thing if you're doing a refinance. Let's say, which most of the time it's not a nice level number, but let's say you do a refinance and you get the home appraised and the lender says, okay, your loan or your balance is about 80% because you have about 20% equity in your home. That's good. You'll probably get a better rate. And if you're paying private mortgage insurance, that'll probably be gone too. LTV is a huge factor as well. Now, another thing here is the type of mortgage that you're getting. The best example of this is if you are looking to do a refinance and you are looking to refinance your mortgage and take out a little bit of cash, right? Lender gives you cash back to add on something to the house or pay off a credit card, whatever the case may be, okay? You usually get a little bit of a bump in the rate, usually. Maybe your lender can waive that. I don't know. I don't want to speak for the lender, but there's usually a higher rate if you're looking to do something like a cash out refinance. So talk to your lender about that. Say, hey, is there a hit on the rate? If they say no, then talk fees, because maybe they're putting it in the fees and whatever. That's a whole nother conversation, but I just want to share with you that those are some of the factors that you can actually control. Now, let's talk about the factors that you can't control. Now, first one is overall economy. How's the economy doing? Is it in the tank or is it doing well? Overall economy plays a huge part in what mortgage rates will be. Inflation, good old inflation, right? $10 in 2020, where we're at right now, does not buy as much as it did in 1960. So inflation happens year after year. Why would mortgage rates not be, or rates in general, be adjusted, right, or determined by that factor? So inflation is something that we have to deal with. Job growth. This is a huge one, actually. Job growth helps determine what rates will be. High unemployment numbers, they're going to probably try to provide more attractive rates to get people buying, and vice versa. So job growth is a huge indicator. That's something to really look at. Some other things that play in part that actually play a factor in determining mortgage rates are things like retail sales for retail stores, right? Big business, small business as well, but it's mostly big business that these experts look at. Home sales absolutely play a part in determining mortgage rates and various other business factors. So these are some of the factors that play a part in determining mortgage rates. That concludes this episode of the Ask Jason Gelios show. Really appreciate you guys watching. Hey, be sure to visit my website. It's allabouttherealestate.com. And if you haven't done so already, you can go ahead and follow me on social media and on YouTube. Hit that bell so you don't miss out on future episodes of the Ask Jason Gelios show, as well as in between videos that I like to upload with real estate updates and general tips. So I'm Jason Gelios, Michigan Realtor, and I hope you guys have a great week. Guys, for watching this episode of the Ask Jason Gelios show. Did you know that I also have a podcast? Go to where you love your podcasts, where you love to listen to those podcasts, right? Search Ask Jason Gelios show, or you can search my name, Jason Gelios, and be sure to subscribe. Take me on the road with you, right? You can hit audio. I add episodes all the time. Be sure to subscribe to my podcast. Thank you.